Hello traders, Gary Wagner here, approximately 9:45 in Honolulu, 3:45 in New York. It is Tuesday, 14th day of June 2016, and this is the Daily Report for Gold and Silver. Nominal changes across the board in the precious metals markets. Silver trading off by a couple of cents, gold trading up about $1.10, currently $12.88. It's traded to a low of $12.76 and a high of $12.93. This all in light of a strong U.S. dollar today. Time permitting, we will look at a couple of dollar charts. The onset of this month's FOMC meeting, and of course, concern about Britain exiting, as they call it, the Brexit. And that, of course, will occur next week. I do want to start today's show off by looking at simple daily candlestick chart. Dollar index currently up about 0.64% or 60 points to have a current fix at 94.96. Since Thursday of last week, when it was trading at around 93 and change, 93.40, we have had this market move dramatically higher. Today is no exception. When we look at how that has affected the metals, we can certainly see that the strength of the U.S. dollar has almost all but taken away any kind of gains from normal trading. $8.85 higher in gold due to normal trading, subtract about $7.50, and that's where we're getting this net change of roughly $1.50. The other thing that is absolutely noteworthy is gold is really the only precious metal able to overcome U.S. dollar strength. And we actually have strong selling in platinum and palladium, taking those two metals lower along with silver. As you know, we are currently long gold. We got long roughly at 12.45, right in this area as the market broke above this 23% retracement. As the market has been moving up, of course, we have been trailing our stops up. Our stops are currently below this candle here, 3 days, which puts it roughly at 12.68. Now, with comments that will come out tomorrow from the FOMC meeting that is underway today, of course, anything can happen. Most analysts, including myself, are not anticipating a rate hike. But the one thing that we have talked about over the last couple of days was the fact that as we got to these highs, these recent highs, and we had a higher high today, as I said, trading up to 93, it does appear as though we've run into at least some resistance. And that can also be seen when we pull our Elliott wave count up. That matches to the conclusion of wave one, the really significant rally that began this entire crusade, so to speak. And this is the Elliott wave count that I have been speaking about, and the clear fact is that when we extend our line from the conclusion of what we are labeling as the wave one, our first wave, and extend that pretty much lines up with the tops that we're witnessing now. We've also got a much smaller bodied candle, but as I said, going into the FOMC meeting tomorrow, I do expect it to be fairly quiet until some fireworks possibly erupt after comments are made and we find out whether or not there will be a rate hike, and if so, when. And traders, another factor that has kept me with a strategy of trailing our stops behind the market as it moves up, rather than suggesting that we simply exit at the area that we're at, which is, roughly 12.88 currently, is when we look at our Japanese average charts, our Heikin Ashi, we can see this defined rally. We are still having the green candles with an absence of lower wicks, which is very positive. Body size is decent, although it is declining, but it's certainly not a pivotal candle such as you'll get at these V's and at points at when a market is in transition. Of course, that could change in a day. So for that reason, I am questioning whether or not we really want to trail our stops up, because we could have some wild swings in the market and still have it spike up. As I said yesterday, for those that are comfortable with a profit in this area, you can go ahead and take it. These are near the highs that we achieved. For the record, though, we're going to sit this one with an open position and see what the market does. If, in fact, it does come down, we have our stop in place, which, as I said, is roughly at 1268. If it continues to track higher, I think we could breach 1300, and I'd like to see how it reacts if and when it goes to 1305. Lastly, when we take a look at a weekly chart, and that is what we currently have up, we can absolutely see that over the last 3 weeks, we have had a dramatic rise from 1200 to about 1290, about a $90 rally. Typically, when we have gold rally, have a substantial rally, it's anywhere between $90 and $120 on average in terms of a rally. That's another reason we could see the market move higher, but we also have to note that the range, and we have to also realize it's only Tuesday, but the range is nothing like what we have seen over the last prior 2 weeks. And the question is, if we get that big spike, will that really propel gold above 1300 and 1300 become a base rather than very strong resistance? As I said, my suggestion, maintain your current long position, maintain your current stop. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.